This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices extended gains on Monday, buoyed by escalating concerns over potential supply pressures from Middle East producers following Israel's increased attacks on Iranian-backed forces in the region. Brent crude futures for November delivery increased 51 cents, or 0.71%, to $72.49 a barrel as of 0330 GMT. That contract expires on Monday, and the more active contract for December delivery gained 50 cents, or 0.7%, to $72.04. Last week, Brent fell around 3%, while WTI fell by around 5% as demand worries increased after fiscal stimulus from China, the world's second biggest economy and top oil importer, failed to reassure market confidence.
Rising U.S. crude oil exports are boosting the prominence of Gulf Coast price benchmarks and buoying trading volumes on Houston contracts, eroding the significance of the Cushing, Oklahoma, storage hub. Since U.S. WTI Midland crude oil transactions joined the dated Brent price assessment a year ago, U.S. oil exports have overshadowed the role of Cushing as a storage and pricing hub, traders and analysts said. Cushing has been the delivery and pricing point for West Texas Intermediate Crude Futures, WTI, on the New York Mercantile Exchange since 1983. The benchmark is currently used to price major U.S. crude grades for physical delivery, trading at a differential to WTI.
Moving on to the top news in the energy sector.
The Biden administration on Friday canceled a planned auction of offshore wind development rights off the coast of Oregon after the state's governor said she did not support the sale. The announcement was a setback to U.S. President Joe Biden's vision to deploy turbines along every U.S. coastline as part of his efforts to fight climate change. It marked the second time this year that the U.S. Bureau of Ocean Energy Management, BOEM, has shelved an offshore wind lease sale as the nascent industry struggles with high costs and supply chain challenges. The agency called off an auction in the Gulf of Mexico in July. BOEM, a division of the Interior Department, in a press release cited a lack of interest from the offshore wind industry in the Oregon sale, which had been scheduled for October 15.
Australian liquefied natural gas, LNG, producers may need to commit extra gas to the domestic market instead of exports due to a drop in the supply forecast for next year, the competition watchdog said on Friday. The LNG supply surplus in Australia's main East Coast gas market is forecast to shrink to between 12 and 27 petajoules (PJ) in the first quarter of 2025, down from the 26 to 35 petajoules forecast in June, according to a quarterly report from the Australian Competition and Consumer Commission. The smaller forecast is due an increase in contracted exports in the September quarter. Australia was the world's largest LNG exporter until overtaken by the US last year. Next, we have the top news in metal markets. London copper and zinc prices hit their highest levels in about 4 months on Monday, as top consumer China released a series of supportive measures to boost its economy. 3-month copper on the London Metal Exchange, LME, rose 0.7% to $10,051.50 per metric ton by 0220 GMT. It hit $10,158 earlier in the session, the highest since June 7, and was set for the best monthly gain since April. The most traded November copper contract on the Shanghai Futures Exchange increased 0.3% to 78,800 yuan, $11,233.71 a ton. It hit the highest since July 16 earlier in the session at 79,460 yuan and was also on track for its best monthly gain since April.
Iron ore futures surged for a 5th straight session on Monday, as top consumer China's latest property stimulus and a raft of monetary easing policies brightened the key steelmaking ingredients demand outlook. The most traded January iron ore contract on China's Dalian Commodity Exchange, DCE, jumped 9.5% to 812 yuan and 50 fen, $115.83, a metric ton, as of 0304 GMT, after touching 835 yuan, the highest since July 16, in early trade. The benchmark November iron ore on the Singapore exchange surged 8.53% to $110.85 a ton after hitting an intraday high at $113, also the highest since July 5.
We will now look at the top news in the agricultural sector.
India gave the go-ahead on Saturday for exports of non-basmati white rice to resume as inventories in the world's biggest exporter of the grain surge and farmers prepare to harvest a new crop in the coming weeks. Bigger rice shipments from India would beef up overall global supplies and soften international prices by forcing other major exporters of the staple such as Pakistan, Thailand and Vietnam to reduce their rates, traders said. New Delhi set a floor price for non-basmati white rice exports of $490 per metric ton, a government order said. That came a day after the government cut the export tax on white rice to zero.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.